Let's discuss this and the current market setup with Nilesh Shah, Managing Director at Kotak Mahindra AMC. Nilesh, great to have you on. Good morning. Thank you for joining in. So this is pretty much it, right? Seem to be stuck in no man's land because this tariff uncertainty is not going away. First of all, let's get your view on this, because the rhetoric is so high and there is still a threat. It's not just rhetoric. I mean, who knows what happens tomorrow? If we get penalties, if the numbers go up, do you expect this to keep a lid on the market's future gains? Because if you strictly look at numbers and market capitalization, then the current market doesn't have that much representation from the export-facing sectors. They're very low weights.
Undoubtedly, if the tariff uncertainty lingers, it's going to cap the upside. And depending upon the steps taken, it could even mean more downside. Markets today are pricing in that ultimately things will settle down and there will be a takeout trade even on US-India tariff. If that expectation is not met, then undoubtedly upside is kept and there is room for downside.
So suppose, Nilesh, morning, we get the 25% number, despite all attempts to try and negotiate it, all hopes. What if it stays at 25% and add in a couple of penalties, or even just pure 25%? What is the extent of downside that we're looking at? I mean, is the market just getting too complacent about this taco trade and the fact that India will be able to negotiate a good deal?
So the market is pricing in that anyway we are a domestic-driven economy. And some of our exports, like pharma, may continue to get a preference. There will be undoubtedly hit on sectors like chemicals, textiles, but hopefully we'll be able to find other buyers. Exports to US is about 2% of GDP. And if something gets hit, we could cover that up through stimulating domestic economy. More importantly, market is also believing that better senses will prevail. Yesterday, we did see some American politician reminding to President Trump that India is an ally and your enemy number one is some other country. Clearly, market is today pricing in that better senses will prevail, things will settle down. And what we are seeing is more of negotiation tactic rather than a longer term play.
Hi Nilesh, good morning. Good to see you in. We started the week on the high, with India coming out trumps against England, and the Nifty as well did quite well. But over the last 24 hours, again, Mr. Trump is throwing tantrums and making this tariff situation very, very uncertain for us. But longer-term investors, normally times like these provide great entry opportunities. My question to you is, what would the allocation be as of now? Someone is looking at deploying fresh capital. Is this the time? Or with the kind of uncertainty, domestic data points itself are quite soft. If you look at consumption, if you look at power demand, electricity consumption, and you have this tariff uncertainty as well. What would you say? Sit on some cash for now or gradually start deploying?
So Nigel, while there are some headwinds to the Indian economy in terms of what you mentioned, there are also positivity. Monsoon has been good. Inflation is under control. In fact, today we expect RBI to revise their inflation target downwards. Growth is still 6% plus. Balance of payments is in a fairly good shape. So overall, our macro continues to remain fairly supportive, and it keeps our market, supported. Purely from a valuation point of view, we are still pricing in a lot of positivity. We haven't priced in any uncertainty on the tariff. So overall, if you are an investor, this is time to be long-term investor. Please, please, please moderate your return expectation. We are unlikely to see 20-25% return of last 5 years. There will be volatility, so having some cash in portfolio should be ideal.
Absolutely. So need to tread with perhaps some caution. Nilesh, policy day. So I think it's a pretty split verdict. There are those who are in the camp saying 25 basis points just today. Then Lata was telling us a large section of the market feels that it's probably better to just wait and watch. But what's your sense? I mean, do you expect a bigger domestic growth revival in the next couple of months?
So RBI has done a lot to revive the growth in terms of liquidity and interest rate cut. In fact, they have front-loaded interest rates cut, and unexpected downward movement in inflation does open room for RBI to give one more rate cut. But should they give now? Should they give later on? That's a tough question. Market is also divided. Some people expect front-loading of rate cut. Some people expect wait and watch. So my guess is that probably RBI will maintain status quo, but give indication that they will be data-driven and there will be opportunity to cut rates if inflation continues to behave. Undoubtedly, we need domestic stimulus to avoid any adverse impact of tariff. Could that be more from monetary side or will that be more from fiscal side? My guess is that it's more likely to be fiscal side, and which is where there has been rumor about some GST rate rationalization.
What about triggers for the markets, Nilesh? You know, one reason for the sluggish is also this tariff headwind, which is capping the upside. But even in terms of positive triggers, it's not that we've seen too much. If this GST rationalization comes through, it will be good. Inflation forecast. But looking ahead for the next 6 months, what are the triggers that could move the market higher?
So one trigger could be from a flow point of view. FPIs have been sellers, active FPIs have been sellers for a long period of time. Majority of flows which we have received is passive. Could they start coming on the buy side? If that happens, markets will get supported. The second thing will be earnings expectation. This quarter earnings has been little bit subdued. On a larger base, it's now consolidation phase. But 6 months down the line, could the management be talking about better earnings growth in the days to come? Undoubtedly, market today is pricing in that FY27 earnings growth will be in double digit, while FY26 earning growth is in single digit. How big is the gap will probably determine the next up move. So between earnings and flows, markets will wait for triggers.
You know, Nilesh, the hope is that the market's looking ahead, and from September second half onwards, most of the monsoons will be in, that will be behind us. We'll have pre-festive buying as well, and hopefully consumption on ground will pick up. And that's what will kickstart the economy after all these rate cuts. Hopefully we get some fiscal, trigger as well, as you're talking about GST. Some rationalization on that front will help. Given all of this, consumption is expected to improve. So how do you, play that particular basket? Or which are the sectors, themes that you would look at?
So Nigel, but it is unlikely that people are going to spend money on roti and kapda. That's well taken care of right now. It's more likely that this money is going to get spent on experiences. We believe consumer discretionary space is something which will get flipped, which will get boosted from the tax rate cut, potential GST rationalization, a petrol diesel price cut as the pump level prices are much higher than crude level prices, and also eventually 8th pay commission. The Sone Pe Suhaga is interest rate reduction, which reduces EMI burden on the borrowing people. So consumer discretionary space, which includes airline, tourism, travel, home improvement, electronics, these are the items where we believe there will be outperformance, there will be volume as well as margin expansion.
Any pocket in the market, Nilesh, where you see value right now?
Value, well, beauty is in the eye of beholder. If you are looking to buy...
What is looking beautiful to you?
Yeah. So Reema, if you're looking to buy 100 rupee thing at 80 rupees, there's nothing in the market which is that cheap. Especially, as an investor, we are not activist investors which can unlock value. If you are looking to pay fair price, 100 rupee thing at 100 rupee, then consumer discretionary is one space, as I explained earlier. There are some financial services firm where there could be opportunity. I believe even chemical sector hopefully is making bottom in the specialty and niche chemicals. So these are some of the sectors where I believe you will be paying a fair price and you will be paying for the growth at reasonable price.
Okay, all right. What about autos? How do you approach that space? There has been some softness. Mahindra & Mahindra is obviously an outlier. Tractors as well have been pretty good. But how do you play this theme?
So on the auto side, Nigel, there are multiple, headwinds coming into play. The two-wheeler sales unexpectedly dropped in the month of June and July. The passenger vehicle sales also have been subdued except for some players, which you mentioned. Commercial vehicles is also not, really firing like tractor. So effectively, you are playing a bottom-up stock picking in auto sector. In auto component, we believe there is also some opportunity, especially companies which are more focused on the electric vehicle segment. So auto, by and large, as a sector is trading below historical average. But right now, there are no headwinds. When the 6th and 7th pay commission came into play, a lot of people went into buying of basic automobiles or upgrading of their automobiles. Now, 8th pay commission, could that provide a boost to the passenger vehicle, especially as people go towards upgrade from ICE to electric, from entry-level car to mid-level sedan or premium SUV? That's something which auto sector might be pricing in. And if that happens, then we could see some opportunity in auto sector.
Okay, so several areas of opportunity. You just have to look carefully and then decide for yourself. Take that point, Nilesh. Finally, what about flows? Very soon we'll be looking at the monthly numbers as well. Until now, SIPs are fine. People have kept the faith. But overall, with the market testing investors' patience, overall flows have come down. NFOs have come down. What's the sense?
No, Surabhi. When the July number comes out, you'll be surprised. I think this will be the highest ever collection based on whatever data I have seen. I don't have privy to entire industry number, but whatever we have seen, this will be the highest ever mobilization in this financial year.
You're talking about the net equity inflows that we track, Nilesh, the equity inflows?
I'm talking about equity inflows. It will be the highest ever mobilization in this financial year.
In this financial year, which started in April.
Yes.
But I was comparing with the highs of Diwali last year, to be fair. December, even January, when the flows used to be 40,000 crores per month. This year, it's been...
Aapke muh mein ghee shakkar, Surabhi, you won't be disappointed.
Okay, that's good to know. But also on the flows piece, Nilesh, I think investors have also become very savvy, right? And a lot of money has been going into hybrid funds as well. Especially last 2-3 months, that trend is very, very clear. If that continues, do you think it'll kind of draw some money out of the pure equity side? So though even hybrids do invest partially in equity, but could that kind of take a part of the money away?
Undoubtedly. But as an industry, we have been pushing hybrid funds to conservative and average investor. And we are recommending that to even investors when we believe markets are rich. This hybrid fund is a fantastic innovation. It allows mutual fund managers to buy when markets are cheap and sell or book profit when markets are expensive. It is kind of counter investing, and many of the hybrid funds have delivered as good return as principal index like Nifty or Sensex over a long period of time by doing this contra investment. This hybrid funds collectively will have about 75,000 crore to 1 lakh crore to invest in case market falls and becomes cheap. This kind of provides bottom to the market. And at this point of time, hybrid fund should be part of every conservative and average investor's portfolio.
Okay, all right, Nilesh, appreciate you joining in. We're going to hold you at that. The flows are going to be solid. And Surabhi as well, keep an eye out on that number. Things could get better from here on, because in the studio, Surabhi normally tells me, Nigel, dissect the data. It's not looking as good as what it was, but she's keeping the faith, I'm told. So
no, absolutely,
that should help.
Because now Nilesh has given us a headline looking out, I think, at 9th, 10th usually. This time 9th is falling on a weekend, so maybe next week we'll have the numbers, and fingers crossed for that. Thank you so much for joining in, Nilesh. Great talking to you. Thank you.